Namaste, welcome to Arthaniti. Few days back, a study was published by the name Indus Valley Survey. Now, in this report, alarming statistics were published. One statistic that caught my eye was that only 2.6% of Indians invest in mutual funds. Now, for such a large population as our country, this small number of investors taking advantage of mutual funds was deeply distressing. Firstly, because I have done my PhD thesis in this particular subject, and I know that mutual funds are one of the best ways in which you can earn better than the inflation rate. So I thought, why not start a series about basics of mutual funds? So today is the first video in that series. Today I will start with introduction to mutual funds. So then, what are mutual funds? People do not invest in such instruments as they are unaware about the benefits and how they function. So let us clear our basics, right? So what are mutual funds? See, mutual funds are an investment pool. What do I mean by that? People like me, you, contribute their money in this investment pool. On the basis of the objectives of the fund, this pool of money is invested in diversified securities like equity shares or debentures, mix of both depending on what objective the fund has. A professional fund manager is appointed who makes investment decisions. See, in our daily lives, when we are already working to earn money, it sometimes becomes impossible to know where the markets are heading, to know about the various changes in the rules and regulations that government makes, and how you should invest your money so that you earn better maximum returns. The aim of investment is to earn higher than the inflation rate prevalent in our country, correct? So it becomes a bit tedious and you might lose out on some information. So, in such a scenario, taking advantage or appointing a professional expert whose only job is to manage our money well and make investment decisions based on the philosophy of the fund that we have invested our money in is the best solution. So, mutual funds helps you do that. Now, there are various types of mutual funds. There can be equity funds, there can be debt funds, there can be hybrid, balanced, you name it. Correct? Equity funds basically invest your money in equity shares. Debt funds invests your money in government bonds, private sector holdings, debentures, fixed interest earning securities. And hybrid, balanced, mixed funds are all a mixture of both of them, where you get advantage of both equity as well as uh, bond markets, correct? So there are various such kinds of mutual funds. Depending on your risk factor, you can choose which kind of mutual fund you want to invest your money in. One of the basic advantages of investing in mutual funds is the diversification that it gives you. See, if you invest in stock markets, you might purchase one share, two shares, five shares. But when you invest in a mutual fund, what you get is a basket full of shares, which you in your individual capacity would seem a very risky option to enter into. So, when you invest through a mutual fund, you get a whole coterie, a whole basket of such instruments, such investment products, which you individually would not be able to invest in. So, diversification is one of the most basic advantage of a mutual fund. You investing in one share versus you along with thousands of people like you investing in a basket of shares, which will give you better returns at lower risk. Why? Because your risk gets spread, right? Another advantage of mutual fund is the expert management. As I told you, you appoint a professional to manage funds on your behalf. So, taking advantage of his expertise, you earn better returns. These are the advantages. So, diversification, expert management, lower risk are all the advantages of mutual funds. See, when you invest in the mutual funds of, or if you have seen any advertisement for mutual funds, it always says mutual fund investing is subject to market risk. Read the offer document carefully before investing. Now, it is true that the risks involved in mutual funds are lower than the stock market risks, but they are not completely risk free. So, you need to understand the kind of risks that mutual funds have. They are subject to market risks, liquidity risks, credit risks, so on and so forth. I will explain these risks in a separate video. But these are the kind of risks involved while investing in mutual funds. Though the risks are lower, they are not completely risk free. So, understanding these risks before you take the decision of investing in a mutual fund is very, very necessary. Nowadays, it is very easy to invest in a mutual fund. You can either invest directly from the website of the fund house, or you can invest in a mutual fund through a mutual fund distributor. Correct? So, it is not very tedious. All things happen online, and you need not be visiting mutual fund offices if you want to make mutual fund investments. Before investing in a mutual fund, it is very necessary that you study the kind of fund, you understand the objectives of the fund, its past performance, people who are managing the fund, your own risk appetite. All these need to be considered. Don't invest your money blindly because someone else is investing in that particular fund. Correct? Make sure you understand the objectives and what you are putting your money into before you invest in any fund. When you decide to invest in a mutual fund, there are a few things that you should take notice about. First thing, your risk appetite. Your risk appetite can be different, say, from any of your relative or friends. Depending on your risk appetite, you can invest in funds which are high risk or low risk. Correct? Then, time horizon that you have in mind. If you have a longer time horizon, it is better to take some kind of risk. But if your time horizon is short, lesser the risk you take, higher is the probability of getting your money and some returns on it. Correct? So, depending on your time horizon, decide which kind of fund you want to invest in. What is your investment goal? Do you want that money for some specific purpose, say like further education or buying a house, child's marriage, retirement? Understand the goal that for which you are investing your money in. When you do that, when you bifurcate this, when you keep that these things in mind, decision making becomes simpler. Correct? So these have to be given careful thought before you start investing in a mutual fund. Lastly, as I have already told you in this video, and I will keep on repeating it, don't go on hearsay. Don't blindly follow influencers or some people who are tweeting about it on Twitter or any social media handle. Make your own due diligence, read about it, double check it, listen to people, listen to news channels such as CNBC, ET Now, where shows on mutual funds are aired. If you have any doubts, I am here to solve your query. For any further resources that you need to read, you have websites like AMFI, the Association of Mutual Funds of India, SEBI, and individual fund house websites as well. All the resources are available there. Please feel free to contact me if you have any doubts, or if you are new to mutual fund investing and you want any particular concept to be understood. I'm here to help you. Please take advantage of mutual funds, as it is a product which has the capacity to help you earn returns higher than the inflation and create a wealth corpus if you do it consistently with discipline. So I hope you like this series of mine, which I will title Basics of Mutual Fund, and I will put videos about the various concepts of mutual funds, which will help you take decisions about investing very easily. Until next time, stay safe. Thank you.